Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off. We got about 24 minutes to go until the start of trading, and you got markets in the green right now. S&P's up by 14 points, or about 0.2%, trading at 63.40. NASDAQ 100 slightly in the green this morning, up by 0.2% as well. We got a deal going on with Apple and China. How about that, man? Let's get over to that headline because we had a little bit of a boost right now. And yeah, Trump, Apple to announce a fresh, not China. What did I say? Apple and China? 100 billion U.S. investment. Yeah, China. You know where China came into my mind? Anyway, we'll get back to it. So you have Apple trading higher. Okay, you have 100 billion. I was going to say million. There's no more millions. It's all billions, folks. 100 billion domestic manufacturing. And yeah, as all those companies try and make sure they exempt from some of the worst tariffs, that one just hits the press this morning. We got Uber earnings. You got Disney earnings this morning. You have OpenAI raising money at $500 billion market cap. Not bad. And we have markets in the green. The Dow up by 160 points right now, 0.3%. And you got the Russell up by 2 points right now. Bitcoin just chopping around 114,340 this morning. You have crude, a little bit higher prices off that 65 low yesterday. Crude trading at 66.37. You jump to notes and bonds, the dollar, and no real huge action off of the move we got last Friday. Right now, you are a little bit lower, okay, with a little bit higher yields. But boy, we got a 10-year at 4.22, folks. 4.22, the yield on the 10-year. You jump over to the dollar right now. It's not stopping. The dollar's at 98.41 right now. Now, what's interesting is you get a weaker dollar, okay? Watch the contract. And you haven't gotten that real acceleration. You actually have gold negative. Okay, you have the dollar at recent lows. We're pushing 98.40. And gold is well off the highs of yesterday. Almost $20 off the highs. We're trading at 34.25 right now. Gold, you jump over to silver right now. Silver, a little bit of a different story. Silver up by about 1 penny right now. You jump over to the VIX. It's quite a spike, of course, on Friday. You made it to almost 19 yesterday. We backed down to 1766. All right, let's go over to some of the equities moving this morning. And yeah, so there's your lift on that news. You spike from 203.50 to 206.50. This is Apple. You're going to open by almost $3 in the pre-market. That's a 1.5% higher. And yeah, so Apple making deals, making sure that they're not going to get the worst of it when it comes to tariffs. Today's announcement with Apple is another win for our manufacturing industry. This is the president and the White House talking. But yes, Apple's going to commit to another $100 billion on domestic manufacturing. New manufacturing program designed to bring more of Apple's supply chain to the U.S. Additional critical components domestically. And we'll see how the details go on that. And they had previously announced a plan to spend $500 billion in the U.S. over the next 4 years. Wednesday's announcement is an addition to that. So $600 billion is the number now over the next 4 years. All right, let's jump around to some of the other equities, man, because we got some movers. So Disney, Uber, McDonald's, all with numbers, all chopping around this morning. Top's profit estimates led by Parks Division streaming, but boy, this thing accelerated lower. On their earnings, they're chopping around this morning. Revenue increased 2.1% to $23.7 billion in 90 days. Not bad, man. Earnings, $1.61 a share. Market was looking for $1.46. Income at the theme parks division, 13% growth. Income, revenue increasing 8%. The streaming business made almost $350 million. But conventional TV, entertainment, income fell 28%. And the film studio suffered a loss. And the market slightly in the lower this morning. So ESPN's getting a fresh spin. August 21st launch of a new streaming site for $30 a month. And that gives you access to all the company's traditional TV channels. And Disney will also offer the new ESPN as part of a bundle with Hulu and Disney Plus for $36 a month. Now, it's a big number. Okay, but boy, they're making a lot of money off those regular cable customers on that ESPN deal. And now they're going to package it. And it'd be interesting to see if they can get the same type of revenue packaging it. That's a tall order. And we got Disney down about $1. You see, we come into those earnings toward the higher part of this consolidation, right? And what's remarkable here is, folks, okay, I was getting a question about this on one of the programs recently. And I said, yeah, short term, okay, short term, yeah, you're bumping up against a technical area of resistance, folks. Okay, you put it back on a 5-year weekly, and you can see, basically, for the last 3+ years, Disney's been trading between 80 and 120. That's it. Buy it at 80, sell it at 120 the last 3 years. All right. So look for the breakout, but we're trading a little bit lower today. But what's remarkable about their trading area, okay, if you're trading Disney, folks, it's not just going back the last 3 years. This area also correlates where you chopped around for the better part of 2015, 16, 17, and 18 before you broke out in 2019 on the news of their streaming service. So short term, we're facing some resistance. We'll come back. We'll talk some Uber. We'll talk some McDonald's. We got a lot to talk about, folks. Don't go away. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Forgive me, folks. That mic got muted somehow. You jump over to Disney shares this morning. Okay, there's the reaction on their earnings from 123 down to 113. You have the conference call began at about 8:30. We have a little bit of volatility. Decent numbers, but boy, they got a lot going on in terms of the shuffle. So ESPN's getting a new spin, right? 2 weeks from now, folks, they're going to start a streaming site, $30 a month, okay? ESPN is the last, piece of conventional TV that's never been available for streaming. And as somebody that cut the cord in my house, I'll tell you folks that ESPN is the one that drives me crazy. You cannot get ESPN. You can't get it. Can't get it. Okay? There's no way around it. You need a cable service to log in to watch ESPN 1, not ESPN the Ocho, okay? Or ESPN 3 or ESPN Plus, right? The ESPN with all the good actual games that they air. We're talking about hockey was been on there. There's a lot of good games that they air on there. Now you can get them. And yeah, they got a big field. Now what's even bigger than this is, okay, we're coming up on NFL season. Not a coincidence. This is happening right now, okay? And this news out there. So ESPN is going to buy the NFL Network and other assets in a stock swap. Now this deal has been out there. It was reported by The Athletic on Friday, okay? I was reading about it this past weekend. And yeah, the market was cascading to lower prices, so you're not going to see a huge reaction on Friday no matter what. But that was reported on Friday, okay? So not too shocking that does come as part of their earnings. But they're going to buy the NFL Network in a stock swap. The NFL has struggled with their own network. They've laid off people. That's been a problem, okay? And there is a huge demand for the NFL Red Zone. It is an amazing product, folks, if you've never checked it out, okay? And, yeah, it's far better, in my opinion, than when you go to, your total pass every game. Anyway, for what it's worth, they're going to have it all. They're going to give it to you, okay? And it's going to be an additional one beyond going back that Disney's going to package all of the company's traditional TV channels. That is not Red Zone for $30, okay? And more interactive features. Disney's also going to offer ESPN as part of a bundle, okay? Now, for the Red Zone out there, they already have changed this, folks, okay? They already started putting ads into this. What was amazing was you used to pay for this. It was something like $100 a year, right? You get the whole year, something like that, $75 for the year. You get NFL Red Zone every Sunday. And Scott Hansen, who's the great host of that, would start and say 7 hours of commercial-free football. And he actually stopped saying it because they started airing ads. So that is coming, okay? The age of and that's why the NFL network's probably dying, right? You see areas like that, they're the ones that fail. The ones that succeed are the ones like Meta that's going to jam 17 ads down your throat. As you press skip, you don't touch any of them. But meanwhile, people are paying for every one of them, right? And yeah, people are touching them. People are paying attention to them, or people wouldn't be paying for them. But yes. So in exchange for Disney getting the NFL Network, ESPN Red Zone, okay, the NFL gets a 10% stake in ESPN Sports Network. That's not just ESPN. That's not Disney, okay? That's just ESPN Sports Network. But what's so cool about that is it goes even deeper, right? Then imagine. I was always looking at this saying, okay, there's a real risk here that ESPN gets cut out as the middleman, right? They're the clear leader, okay? It would be very difficult to do. But there's nothing like live sports, and what's to say? You're already seeing it happen, right? Amazon has Thursday Night Football, etc. You're going to see it come to all the big streamers, okay? Who's to say that ESPN needs to play a role? Well, you better believe they're going to play a role when the NFL has a 10% ownership stake. And yeah, you got the NFL Red Zone, NFL Network cable channel. Disney will get to air more NFL games on top of it, and I wonder how that's all going to play into the deal. But yeah, $30 a month. And I'll tell you, folks, when we get into it, I might be signing up for some of those, okay? Because being in a house that has no cable, it was happening with the NHL playoffs last year. I would watch many of them on HBO Max when TNT was airing those games. And then when they would jump to an ESPN game, I wouldn't be able to watch it. And there was no way around it unless I signed up for cable TV or signed up for one of the streaming services online, which I wasn't willing to do. I pay for enough streaming services already. So ESPN is jointly owned by Disney, 80% stake in Hearst Communications. Who knows that? Which owns a 20%. And that deal with the NFL is expected to close next year. I wonder how that's going to play in even. NFL games attracted an average of more than 17 million viewers each game. 2.2% decline from a year earlier. Yeah, and they dominate the majority of the 50 most watched primetime broadcasts for the entire year. So that's a shakeup. Investors a little worried, though, on the Disney shares. You drive down to 116. And as I mentioned, longer term, I think Disney's going to be great. But watch this volume as we come in. We're right at the top of 2024 right now, and you are pretty close to where we were pushing. Okay, on a longer term basis, you're bumping up. Folks, we were trading at $122 in 2015. Exactly. Oh, my goodness. It's exactly 10 years ago. Check that out. The week of August 1st, 2015. Right back to where you are. All right. We jump over to Uber shares this morning. So a little volatility on Uber numbers. The first move. Talk about some movement. Down to 84. We're back to 90. We jump over to Uber shares this morning. How about a $20 billion buyback? Remember when these companies, and I guess I'm an old man, the way I'm talking. Remember when these companies were growth companies? Right? That they were trying to turn to profitability? Not anymore, man. Okay, Uber announced a $20 billion new stock buyback after sharing a better than expected third quarter forecast. You see the reaction, though, okay? These equities, when you've had the run that you've had, are priced for a fantastic performance. You saw it last week with Microsoft and Meta, okay? You saw it with Apple to a certain degree. Uber announced a $20 billion buyback. Yeah, we'll get into this after the break, but we got a little volatility. You take a longer term look at Uber shares, and yeah, you talk about a run, baby. And, you know, that channel is intact going into 2024. You break above, you get below where that really sits, okay? Maybe deserve a little bit higher on the short term. Nonetheless, Uber shares going to open almost flat on their numbers. We'll talk some McDonald's. We're talking to our man at Teddy Cakestack coming up at 40 past the hour as well. Don't go away, folks.
Your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Cakestack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Cakestack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Markets give it up a little bit on the open. You got the S&Ps right now up by 7 points. I say give it up. You know, we're trading, 10 points higher. A little bit of selling coming into the close. And yeah, jumping back to Disney. So it will be interesting. All right, Disney opens. You're down by 2% right now. You take a look at some of the equities moving. You got Uber shares down by 0.2%. We'll get into McDonald's in a moment. They are higher, up by 2.7%. Apple shares digesting their deal. They're going to spend another $100 billion. Domestic production in the U.S. up by 1.7%. Amazon shares slightly in the green this morning. We jump around to some of the other leaders. Meta up by 0.7%. Microsoft, similar 0.7% right now. Google, we'll call it flat. You got NVIDIA shares down by 1%. Some of the chip stocks, yeah, AMD with their numbers last night, they were talking about it in the den, down by 6.7%. And yeah, it's a great discussion going on in the den, folks, because it is, what's interesting here, right? So Red Zone is an amazing, amazing product, okay? And I hope they have a premium service, right, that has no ads. And I agree with you, Duffy. So YouTube Premium, and if you're on YouTube a lot, folks, and what's interesting, right, is so I switched to Netflix with the ads, okay? And I lasted like 2 months because it wasn't about the time. It was about the enjoyability experience, right? I work really hard. I work all day. I don't watch a lot of enjoyable television, right? Maybe an hour a night or something like that. I watch a lot of television. A lot of it's Tiger TV, okay? Some Bloomberg television early in the morning. But recreationally, I'll watch some television with Tommy, of course, watching his shows. But it just ruins the experience when I want to relax for those few moments. And it's a privilege, okay? So I decided to pay for it again. So I jacked it up. And it'd be interesting to see if they try and do both, though, in terms of selling ads and charging a subscription. Look at Disney. They're selling off, man, 4.2% right now at $113.68 as we speak. Now, where I'll go with that, though, which is interesting, right? And I agree. So YouTube Premium, folks, okay, is not YouTube TV. And it's a great YouTube Premium is you just get no ads on YouTube, okay? If you watch YouTube at all, I mean, the ads are everywhere. Now, you can skip them usually in 5 to 7 seconds, right? Well, $15 is 50 cents a day, depending on how much you watch it and depending on your availability to spend that 15, because, again, it's a luxury, okay? Now, where it gets interesting is that they actually include that, and it doesn't matter because of the cost, but they do include that as part of that new Google Gemini Ultra subscription. Okay, now that subscription is the one I talked about that charges $250 a month. You can use the Google VO3. That's where all the AI videos come from on the internet right now, is mostly VO3. That's where that huge acceleration of them came from when you could start creating 8-second videos with voices, okay? And as part of that deal, okay, you get YouTube Premium for $15 a month included. And then you also gain, I think it's like 30 terabytes of data. And they're giving you all that memory storage because you're going to be creating a lot of the time, a lot of the content. Okay, you're joining a subscription model that allows you to create content and do many other things. But that is included in there. And you can see how they're going to start to interwoven everything in terms of how it plays. Now, YouTube Premium, $15 a month is one thing. Don't go signing up for Gemini Ultra, for $250 a month unless you're going to use it. The one thing is, if you do want to try it, folks, that Gemini Ultra, I think they have a deal going, and look around because it's not always, they don't give it to you instantly, of course, but you can get your first 3 months for something like 50% off. So for $115 or $125 a month or something like that, you get Gemini Ultra, you get the content creation, they have coding in there, they have video production, you get YouTube Premium, you get 30 terabytes of data in there as well, but it's included. But yeah, we're going to see how that game changes, man. And Disney, ESPN, with the market's a little worried this morning with Disney down by 4.1%. We jump around to some of the other streamers. Netflix, maybe a beneficiary, up by 1.1% for Netflix shares right now. Comcast shares are flat. All right, we'll jump back to Uber on their numbers. So Uber down by 0.9%. And yeah, so they have a $20 billion buyback. Gross bookings, 18 to 21% growth rate in the current quarter. Market was only looking for 17%. Okay. So you have Lyft and DoorDash reporting after the bell today. What's so interesting here is Uber's results are likely to set expectations for the broader ride-hailing and food delivery industries. Well, you better believe that they're going to set expectations, okay? These are strong expectations, though. And meanwhile, the stock cannot catch a bid. What does that say about valuations, multiples, where we are on expectations in this market right now, okay? Uber was just trading at 97. They just crushed it on earnings, folks, with a $20 billion buyback. and you're trading right now flat on the session, okay? You're talking about second quarter bookings at $46.8 billion. The rideshare unit was at $23.8 billion. The market was looking for 23.9. Okay? Gross bookings, though, is going to blow it away. 48.25 billion to 49.75. The market was looking for 47.6, so they may have missed it slightly in the rideshare unit, but they didn't miss it everywhere else. And adjusted earnings, 2.12 billion, ahead of the number the market was looking for. And then, yeah, as I mentioned, they're going to be growing. Let's see, 17. Big numbers, man. But as you can see, the market reacting, and they're saying, hey, you're priced for almost perfection here. You came in at almost perfection, and we're going to trade you flat on Uber shares. You jump over to Mickey D's. So, quite the acceleration. They got a conference call going on at 8:30, and maybe just a little bit of give back. Not sure anything getting said in that conference call. The market's giving back some of these gains to a certain degree for a bit. But McDonald's right now pushes 312. We're at 306. You're basically flat right now. Sorry, up by 2.5%. And yeah, that was the buy when you were coming down. This channel line on Mickey D's, man. Look at this thing. Now, this channel line on Mickey D's, folks. Yeah, it goes back further than that. Ooh, yeah, this is the one that goes back 10 years. I always confuse this. You got TJX is in quite a great channel line. I mean, please, folks, if you got any other good ones to put on the radar, throw them out there, because these ones always jump to mind. You know, you want to put one in a textbook, man. There's a channel, okay, and it just doesn't stop. As in, you come within almost $1. You trade down to 283.47. No, we traded down to a low of 283.47. Yeah, and you get the bar somewhere around 282 right now. And already we're what? Almost $25 higher from that point at 305 on Mickey D's. And as I mentioned, TJX is another great one with look at this one. Same thing, man. Look at these channels, folks. Think of Bud Rolfs, the channel master, the man. Love you, Bud. Thank you, man. Look at that channel on TJX, folks. Poof. Textbook versions. You talk about an acceleration. TJX up by 0.5%. Jump around to Kohl's, catching some meme hysteria earlier. Kohl's right now down 0.3%, but still relative to where we've been, Kohl's a little bit higher. All right, we get the S&Ps up by 6 right now, folks. We're coming back. We're going to talk a little bit of currencies, some Forex, some commodities with our man Teddy Kegstad. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio, They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the S&P futures positive by 5 points, trading at 63.30. We have the DXY right now trading at 98.47. We were just down there at session lows. And right now, folks, as we do each and every Wednesday at 40 past the hour, we're going to talk to our man Teddy Kegstad. Head on over to the front page of TFNN. Right under the newsletter tab, folks, you can subscribe to Teddy's outstanding newsletter, the Tiger Forex Report. You click that subscribe button. It's only $97 a month, folks. You get a 30-day money-back guarantee. Teddy puts out an outstanding report every Monday. You gain access to an archive webinar. And don't forget about a couple of great webinars. Check them out, folks. They're only $97. Japanese candlestick pattern, stock and option strategies, and capitalizing on time with calendar stock option spreads with our man Teddy. Teddy Kegstad, good morning.
Good morning.
So we got a little bit of volatility with rates, the Fed. We had a jobs Friday in there since the last time we talked. We have a dollar at 98. What do you think about this market, Teddy? We got a lot going on right now.
Well, I think right now you had a nice little rejection last Friday in the dollar index, and we're riding support, which I think we're going to do for at least another I don't know, I'd say 3 to 5 sessions at least, something like that. I mean, Friday was, we were in a corrective rally for the dollar index for the past month, and it was a grind. So, I mean, the overall trend for the past few months is definitely lower. So I think you really saw that we hit the upper boundary. I would key off of last Friday's high. Obviously, if we can break out and get a rally above last Friday's high, well, that would be a totally different story. So, but we've been hovering below this 101 area in the dollar index without being able to really spike up at it, and that kind of keeps me in this mind frame that we're going to be in this. We pretty much have hit the upper boundary right now, if you will. So, I mean, the expectations with the Fed obviously are it's a very mixed bag of goods. So, I would stop listening to the daily, flashes here and there, because until there really is action, there is no action. I mean, obviously the tone around the Fed is changing, maybe not so much with the Fed chairman, but as far as with the rest of the Fed itself, it seems like there's, I wouldn't call it dissension. I would just say the tone is changing. So, sure. And I think that, that I'm sticking to holding to my what I said already over a couple months ago, is that until Powell's out, he's not doing a thing. But with the expectations of him leaving, and who knows who's going to put in, I wouldn't doubt that Trump makes the appointee known long before Powell is going into office. Yeah. So, and right now I think that's going to have an impact on the short-term rates, especially where, we'll be probably buffering towards, higher yields, leaning that way for the next month or two, at least. So, but I mean, I would look at them as spikes. Right now the market is definitely ready for some real action to call for cutting. Now remember that we started this year off with the expectations of a half a point rate cut sometime over 12 months. We're 8 months into the year right now. So without any action whatsoever and a very negative tone from the chairman.
Sure.
So with that being said, if I'm right, and regardless of whether Trump announces who they're going to do earlier or not, the expectations are that you're going to see at least a half a point to a point rate cut, which would put us back to that rallying point where we were already, months ago, where we're like, okay, we know the upper bound of where yields would retract to at least, because we had already a 3/4 point factored into the market, and it never happened. So now I think if we get that expectation, we should shoot back to those prices, meaning higher prices in interest rate futures and the cash market, meaning lower yields. And that's kind of a turn I think will start to occur long before the action actually does happen. The market is usually forward thinking. So I think that, each day the hourglass has been tipped over on Powell. So every day, no matter what, the market's expectations of a rate cut now are increasing because they know his time in office as chairman is going to be expiring soon. So,
sure.
And until then, we're going to be in kind of a choppy range trade. It's, I would be prone to not listen to the news right now. What I would wait for is when you have any defined, like I said, forecasts of who the next chairman will be, and God forbid Powell actually does something. But I honestly think that Powell's on a mission to do nothing as long as as long as Trump is president, he's not going to do anything.
And yeah, no, it's a great point in terms of all the market cares about what's happening in the future, right? And if they know who that man or woman's going to be that's coming in May, it really doesn't matter what Powell's doing, because it's just like when we have earnings, folks, this morning, right? It never matters what they did the last 90 days. Tell me what you're going to do in the next 90 days, the next year, whatever it is. Boy, it's going to be interesting to see how that plays out. And I would agree that we probably get somebody earlier than usual. How early we get them? Maybe that even accelerated things last week with one of the governors stepping down. We'll find out. Now, I was thinking of you, getting ready for the program coming on today, and thinking about, okay, so we've gone through this period, because I kind of have a little bit of similar, thinking about what you're talking about here in terms of, okay, no matter what happens with Powell here, folks, okay, somebody's coming in to lead the Fed in 9 months, and the pressure's going to be on rates to go lower. Is this an area, and I love how you say, maybe 2-3 months. So is this an area where, over the next 2 months, maybe a little bit of patience, and then we're looking for that next acceleration? And that's kind of what you said, but is that how those kind of line up when you're looking at the dollar?
Absolutely.
Yeah.
Absolutely. Cool. That's the way I think it's going to be. And then I think the yield curve is going to be in play. So, and right now, it's been choppy, as far as, the short terms versus the long terms. But I truly believe that when we have that news, you will start to see a spark there's going to be a disconnect between the short and the long terms. And when that spread starts to move, then I think you're going to start to see the actual direction of rates overall trending lower, meaning higher prices in the 10-year and the 30-year and the short terms.
Okay. We'll see how we go, man.
You'll be able to buy bonds again.
Yeah, right?
Is basically what I'm saying. Right there. And right now, if you were pouring money into the market right now, I would be very cautious on putting money into the bond market. I would wait until once that comes in, then I would be saying, you know what, for the next 6 months at least, you should have no problem with your money in the bond market.
Nice. Nice. I know. Hey, it's an interesting time. We say it all the time, but it really is. We're right on the cusp. And, where we are in terms of the pressure on Powell, it's going to be interesting. And 9 months.
And that'll help with commodities, too, and inflation, too. As rates go down, the cost of carryover goes over. That means the cost of food, energy, everything drops by not significantly, but it does help to reduce it. So that's a factor that will definitely help the overall broad economy to some degree.
The cost of your mortgage, right? I mean, I can't wait to see what kind of stimulative effect. I mean, that's a little bit of what the Fed claims they worry about. But it's people have a lot of money locked in, and even just not even locked in.
Right.
The power for people to buy a house, right? Let alone what's locked into that equity to buy that house
or remodel. How about just remodel?
Yeah, right. Take some equity out, remodel, whatever it is, folks. It's a big number, man. And that one, poof.
Right.
And hey, we got 30 seconds. What do you think about crude, man? Yeah, $65 yesterday. We're at $66. What do you think, man?
I think it's treading lower. There's any rally is a rally to sell right now, I think. There's downward pressure. It's just going to be weak right now. There's no real major fundamentals going to push it.
Teddy, great information, man. I love it. I align with a lot of what you're thinking, and I look forward to talking to you next week, man. And folks, check out that Tiger Forex report. Great information. Teddy, have a great week, man. We'll talk to you next Wednesday.
Take care, Tommy.
Take care. We'll be right back, folks. Stay tuned.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And we got Disney on their earnings down by 3.6%. We jump around. Uber shares. Yeah, big numbers on Uber, man. You trade it lower, down by 1.5% off $1.33 on Uber right now. Look at that volatility. Let's put it to a 5-minute. Yeah, there's a little volatility for you. On their open, Uber shares slightly in the red. Pretty strong numbers. You jump over to Mickey D's, up by 2.5% on their numbers. And then I was seeing the headlines hit. Yeah, check out Shopify. Woo-wee. All right. So I saw the headline coming over CNBC saying that Shopify, that their CEO or CFO, one of them, let's see, the CFO said the tariff hit did not materialize. And that was that second leap. No, that was on the open. Yeah, so they come out with their numbers, and you got good numbers from Shopify, and you are ripping higher by 20%. Oof. So they make 35 cents versus 29 revenue, 2.68 versus and revenue expanded roughly 20%. Man. We had factored into our guidance some potential impact from tariffs, which did not materialize. The company noted there was macroeconomic uncertainty ahead last quarter, but it wasn't seeing significant price increases among its merchants due to the tariffs. Well, that's a data point for the supporters out there of the president. We'll see if it plays out, but boy, that is quite an acceleration. How about going from $70 to $150? Oh, some of these retailers that really took it on the chin. And look at this. So, folks, if you're in Shopify, be careful as you approach 160, all right? Listen, strong company in the long term, but you better believe you might face a little resistance coming up to the highs of 2021. Man, quite a run. Shopify. And what are we doing on volume? Well, not yet, but today's going to be an epic day. Up by 21%. Market's catching a little bit of a bid right now. NVIDIA up by 0.2, and Apple on their deal up by 3.5%. Look at that. Apple pushing 210 from 204. Folks, thanks for kicking off your trading day right here with me. Stay tuned for Basil up next. I'll see you at 3 o'clock, everybody. Have a